Hey traders, welcome to the Top Tier Outlook. We are taking a look at what we have coming up for the week of December 18, and we're winding down the year. This will be the last week before we get into the Christmas week. And then this will be actually on Friday, the beginning of if there is going to be a continuation of this overall strength. And if we want to call it the Santa rally, that should be on the 22nd. So that's what we have coming up. And that Santa rally window will be December 22nd to December 29 in terms of whether or not we're going to see that acceleration of the current window dressing rally. But even more than that, gang, when we take a look at three simple ways to look at what kind of expectations we have on rates, euro is heading higher. Let me show you the 6E. So euro is overall heading higher. It has yet to take out the resistance from the very end of November, but continuation higher through that November 29 high at basically the 110 handle would be huge. And then we take a look at the long bond. If yields are indeed heading lower, which they have been generally, then the long bond, this would include TLT, should be heading higher. And that's exactly what's happening here. And you can see here on the long bond chart, as of December 6th, so 11 days ago, the long bond turned into an uptrend. And as you can see right here, December 14, the long bond closed higher. It closed above the 200 propulsion. That's the 200, the 8-period 200, the 8 exponential moving average, and the 200 crossing and interacting with price. And when that white dot is broken to the upside, we can consider this really more the bullish hemisphere. Yes, it's a very, very fresh cross into the bullish hemisphere, but no doubt that's a cross up into an area that we would look for buyers to come in. Now, in the background, if we're talking about the overall movement higher in light of the dovish expectations from the Federal Reserve, let's jump on over there. Let's head on over to the CME FedWatch tool and take a look at what expectations are for not so much January, but for March. And March expectations continue to be a 62.5% expectation for a quarter-point rate cut. You might say, okay, Rob, how do we even know that? Take a look at the center column right here. And it says 500 to 525. Well, if the current rate is 525 to 550, that means on that March 20 meeting, we'll have 500 to 525. All right. That being said, if we have that 62.5 expectation, what we really want to see is that column continue to get taller. And if that crosses higher through 80%, at 80%, I would consider that to be fully discounted. All right. So that's what we have there. So movement higher on the ZB is lower yields, movement higher on the 6E is a weaker dollar, and then overall the movement higher in the NASDAQ, the Dow, and the S&P shows overall risk appetite in the broader averages. All right. So with that being said, the bottom line is, gang, I know there's a lot of talk about whether or not we're going to pull back, but I really mean this sincerely and tactically. All right. Who cares? Right. I hear a lot of, let's short Microsoft or let's short the NASDAQ or things like that. And that's obviously one way to go. But if I'm looking at an overall move that takes us, say, in the NASDAQ from about 14,500 to 17,000, is the prudent thing to try to take advantage of a move to the downside, or let someone else do that? It's a precarious position to have, and we'll buy the dip. right? And it's a really interesting thing I see happen in sort of the financial land of, I want to short the NASDAQ, or I'm going to pick a top because it's too high, or even worse, right? The jargon that an uptrend is overbought, right? There's actually no such thing. Uptrends in their very nature are imbalances, right? More buying support, more demand than selling. Not more buyers and sellers, because remember, we need a buyer for a seller, etc. But really more buying demand than selling pressure. And that's really where we are. So when I look at a move like the NASDAQ and I look at a move like Microsoft, yes, Microsoft is wobbling a little bit, but it's wobbling within the context of a move that's been pretty strong since the beginning of November. So if you say to yourself, well, Rug, wouldn't that be a shorting candidate? How about looking for stocks that are still green and buying the dip? And I guess that's really what I'm hoping to get across to the largest number of traders as we're going through into the end of the year, which is find those opportunities to buy the dip and at least take advantage of that going into the end of this month and likely the beginning of next. All right. So with that being said, all right. Let's take a look at the comments and questions. Happy Sunday. Absolutely. Thank you very much, gang. Happy Sunday. All right. So first up, Murph asks, and by the way, gang, I'm just really curious because I can see it on my feed. What's this joined stuff? Is that some new thing that people do? Joined? I was just curious what that was. Or are those bots? Yeah, I was just curious. Okay. All right. Murph asks, happy Sunday, Murph. When sector ETF and stock are all in alignment, you know how much I love that. How do we decide which asset product to trade? Okay. So Murph, if I'm looking at, for example, in light of that very thing we were just talking about, if I've got the NASDAQ heading higher and I've got XLK heading higher and I've got the say Apple or Microsoft or whatever's in the XLK heading higher, the question then becomes how many of those stocks within the XLK are moving higher? The more stocks that are in uptrends within the index, the sector, the more likely I am to go with that bigger unit. In other words, I'll go with the tide, not the individual boat. And so there's no wrong answer here, but for me, the right answer is if there are more stocks in the sector or in the index that are moving higher together, the best way to take advantage of all of that is by grabbing that sector or that index. And then sometimes Murph, another thing that we'll run into is when I'm looking at an individual ETF option and there's not enough, let's say XLK or XLC, and there's not sufficient open interest, I lack the liquidity in that strike that I want to buy, then a lot of times I'll have to use a heavily weighted stock as a proxy. So that'll be the next thing that I looked for. Okay. All right. Next up is happy Sunday. All right. BLP asks, do I ever use TMF? BLP, my acronym game on Sunday evenings must be low. I don't know what that is. TMF? Let me know what it is, and I'm happy to let you know if I use it. All right. Ambas asks, would rates go back as low as prior pandemic? No, I would not anticipate that. Or what would be the new ongoing rates to expect and when? Ambas, we know what that is. Again, let's go back to what I was showing you all before. No, I would not expect them to be pandemic. No, I would not. Here's how you can look at it. Let's go back to that CME FedWatch tool. And I don't have to expect anything as much as I'm just going to track it. Very different thing, right? Very different thing. So if we go out to December of 2024, so a year from now, please remember, we're talking on December 17, 2023, a year and a day from now, this is what is discounted. Do you think this might look a little different as 2024 progresses, as we have more data, non-farms, PCEs, GDPs, JOLTS, all that data that we'll get throughout the year, this will probably look different. But as of right now, what I can measure is it does appear that expectations are solidly for rates to be at 4 to 4.5 or 4 to 4.25. So 400 to 425 basis points is 4 to 4.25%. And that's what's being baked into the cake. That's what's being discounted. That's what's expected. So that's the number that I would look for. Okay, Ambas. And again, we don't want to guess at where things are going to be. We can look at the data and say that's what's being priced in a year and a day from now for rates, for the target rate probabilities. All right. Okay. Next up, we look at the gold daily time frame with reversal candle. Well, I can look at the gold daily time frame. So let's start there. So we look at the GC. All right. And this is still a very choppy, still kind of a choppy daily time frame. And so I would not really prioritize gold on the daily time frame at the moment. That's not what I want to, again, if my focus is prioritizing trends, and prioritizing trends starts with something that is trending before I buy the dip, before I play a retracement or a mean reversion, right? In this case, and think about it this way, if I'm looking for a pullback, a mean reversion, I really should start with a trending environment, which I don't have anymore. In this case, I might just look for a support level, right? I might just look for a support level, and that would be just right around 2000. So that's what I would focus on there. Just a level just below 2000, and that looks to be a low around 1992 and change. Let's see what the lows were here. 1992, 3, 1987. Oh, 1987, 9. So that's the area I would look at, right? Where have we bounced and perhaps that Darvis level holds, okay? All right, good morning, Munair. Would I say you are managing about 20 positions at a time in your portfolio? As I do 4 to 6 setups a day? Munair, I'm not sure what the question is, because what I do per day, well, a lot of those are day trades, Munair. A lot of those are day trades. So no, and I don't like to have that many positions open if I'm swing trading. So no, I will not have 20. No, not at all. Not for trading. Yeah, no. A lot of those are day trading. Some of them are swing trading. All right. Remember, if I have a setup alert out there, it doesn't mean that I've filled, right? I don't believe in fill alerts. Fill alerts are, hey, I've gone and done this thing, and maybe you're in a position to go do the same thing now, and no heads up, just, hey, here's my fill. I don't actually like that. I'd be irritated if that's the way I was communicated trades. I like setups. So what that is I'm looking for this option or futures contract or stock or whatever from a certain price. And now we all know what that price is. We all know what that symbol is. And usually it's an option. So now we all know what the option expiration strike is. And if the price criteria reaches that level, then we all buy it. But no, I don't typically have that many positions. No, not at all. WMT, Walmart. So Stanley, of all the things I could look at in an environment that I'm looking for window dressing, we're in a dovish environment. I will not look at things in downtrends. No. So please remember, when you're prioritizing what to look for, find the uptrends, right? Find the uptrends. Let me show you another way to look at this, Stanley. And this is really, again, this is not a matter of right or wrong. This is a philosophical choice. And this is the way that I manage myself navigate through the markets. This is XLP. So this is where Walmart would hang out, right? If I'm looking at Walmart, I'm looking at XLP and Coke and Costco and Mondelez and look at all these stocks that are moving at least either neutral, like Philip Morris or Altria or Estee Lauder or Pepsi, and then look at those stocks that are moving down. So yes, while a rising tide in the XLP sector might bring all these boats up, right? I don't want one with a broken bilge pump, so to speak, right? That means I'm not really interested in Procter & Gamble below the 200 or Walmart in a downtrend below the 200. I really want to focus on those stocks that are in uptrends and above the 200. And that brings Coke, Costco, Mondelez, and, I usually don't trade CL. It's further down the list, but that would be valid too. So KO, Costco, MDLZ, CL, those would be great. MO, EL, ADM, Archer Daniel Midland, and not so much. So always prioritizing the trends. All right. Let's see. If you all are interested in what I do, Cindy, you just sent an email. So you can go to simplertrading.com or you can go to sectorsecrets.com. And sectorsecrets.com should still take y'all to the mastery. I will check that right now, Cindy. So sectorsecrets.com. Let's see. I don't know if I misspelled it or not, but I will check it. But I would say if you go to simplertrading.com, you can find there it is. Yeah, sectorsecrets.com is working. So sectorsecrets.com. All right. And that'll take you to this page. All right. BLP, that is a triple leveraged TLT. I'll tell you what, BLP, I don't use any of those 3X, 2X, inverse, nothing wrong with it. But no, if I'm going to trade the bond market, if I want leverage, I'll trade ZB futures. If not, I'm going to trade TLT. So no, I'm not usually a big fan of the 2X, 3X, inverse, nothing like that. No, I don't trade the leverage. And again, nothing wrong with it if that's the way you want to take the idea of being long or short the long bond and using a different symbol in lieu of TLT or ZB, no problem. But I personally do not. Yeah. All right. Let's see. TT asks, please define a reasonable pullback when in an uptrend. TT, there's two levels. We talk about these all the time. My idea, let's stick with TLT. My idea of a quote unquote reasonable pullback, and let's not use the word reasonable if you wouldn't mind. Let's talk about defined or consistent pullback. It's two things, easiest things: 34 EMA wave if it's in play, or the daily price movement range. And those are the ones I use the most. All right, TT, thank you for the question. Our market's going to slowly pull back until the next couple of CPI reports, or are the bulls ready to push up from now? Bradley, I know there are probably a whole host of traders who will tell you what's going to happen in the future. But if you've been following me for any length of time, you will know I do not prognosticate. Nobody knows, Bradley. Nobody knows. But financials, the financial space is that place, interestingly enough, that people will prognosticate with a lot of bravado, a lot of confidence, as if they can see the future and talk about what the markets are going to do. That's like if today I tell you what tomorrow's Monday Night Football game is going to be, that what's going to happen in the third quarter, right? And what the score is ultimately going to be. And if we actually listen to a sports analyst say, oh yeah, who's playing tomorrow in the Monday night game? I don't even know. Monday Night Football. I don't even know who's playing tomorrow. So ultimately, what I want to remember is that if somebody were to come out right now and say, oh yeah, in the second quarter, this is what's going to happen. In the third quarter, this is what's going to happen. Seahawks and Philly. Oh, okay. So if I come out and say, oh, the Seahawks are going to score in the second quarter, but Philly's going to do this in the third quarter, and the score is ultimately going to be this. You do realize that people on television do that all the time. Oh yeah, we're going to sell off in the second quarter, but we're going to rally in the third, and ultimately this is where the Dow is going to close. It's absurd, the level to which financial media will talk to people as if they know. So Bradley, I promise myself never to be one of those people. Number two, the Federal Reserve does not pay attention to the CPI. They pay attention to the PCE. That's part of the overall model. That's what's built into their models. The PCE, which, by the way, to your point, yep, your timing is great on the question, Bradley, because this Friday we're going to get the core PCE. So perfect timing on the question. If we're going to have a inflation gauge that's going to move expectations for rates, it's going to be Friday. If we're expecting the Federal Reserve full steam ahead dovish, or if they have to tap the brakes, that would be Friday. Would be a great place to look at that. All right. So again, don't know what that's going to bring. Don't know what's going to happen tomorrow, but I do want to follow trends, and trends are about as probabilistic a corner of trading as we have. It's physics 101, right? A body in motion tends to stay in motion. It works in physics. It works in the markets too. Tends to is the key, right? So find those trends and wait for the pullbacks there. Al asks, can you explain tax loss harvesting? Yeah, it's selling stocks that are losers on the year or are exhibiting losses for tax purposes, right? So if I have a losing position, maybe XLE or maybe the Russell or, well, maybe not Russell, XLE or whatever sector stocks down on the year, a lot of times those names will be sold for tax purposes. All right. Okay. So Munir asked, it definitely doesn't make sense for swing trading, right, to use multiple leverage products, have a day trade. I don't use them at all, Munir. When I tell you guys I don't use something at all, I mean it. I'm never going to say, hey, I'm not going to do this and go do it. No, I just don't use them. It's really up to you. It's really up to you. But no, I don't particularly care for them. I think the leverage we have in just a TLT with the liquidity is quite good. All right, is quite good. All right, next up is, let's see, I think, was that it on the questions? Oh, look at that. All right, we are caught up in the questions. So as always, gang, thank you so much for being here for the Charts and Coffee. For Top Tier Outlook, Charts and Coffee will be up tomorrow at 9. And for those of you that are trying to head on over to Sector Secrets, I'm going to type it in right now. I'm not even using www. Does anyone do that anymore? Type in www. I'm just going sectorsecrets.com. So actually, let me move the address window down here. So sectorsecrets.com. I'm hitting enter. And there it is. So just type in sectorsecrets.com. It will take you on over there. And that ought to do it. All right, gang? I don't know if the www thing's throwing anything off, but it's coming up just fine for me. All right. Thank you so much, gang. I'll see you tomorrow for Charts and Coffee at 9 a.m. Be good to each other. Great questions, by the way, gang. Really good stuff today.